I can't ask for more, especially for a stock that's trading at a forward P of like 10 or whatever joke price is trading at. Never mind, they got all these big cost-cutting measures. So do you know what's going to happen to their profitability in the back half of next year once all the restructuring charges are done over the next few quarters? Oh my gosh. It's a steal deal of the century. Woo! Howdy, folks. Hello, hello, hello. PayPal is obviously the big dog we all care about, right? We're also going to have Disney earnings after the bell. We'll also have ARM, one of the most highly valued companies out there in terms of valuation on basically any metric. ARM's going to be reporting. That's going to be interesting. Winning Resorts also reporting after the bell here. I'm really excited to see their numbers. And then Mattel's reporting as well, okay? So, PayPal's big dog, but then after that, Disney, ARM, Win, and Mattel, okay? Then we have PayPal. PayPal, obviously, earnings coming out here after the bell. I got 2,222 shares rolling into these earnings just in the public account alone. I also have some leaps on PayPal, and then it's also the biggest position for me in the Patreon portfolio. So, obviously, it's a position I built. Now, part of me wants the stock to start going up. And it's because I've kind of already fully built out my PayPal position. I don't really need to add more shares of PayPal. I'm good with what I have. It's the biggest position in the Patreon portfolio. It's now a $141,000 position in the public count. So I feel good with what I have. But on the flip side, and here's why I'm kind of here's why if PayPal skyrockets on these earnings or it goes down, I'm happy either way. I'm obviously happy if it goes up a ton because I already have my position pretty much built. But if it goes down, I wouldn't mind. And the reason I wouldn't mind is because I just started buying SoFi stock. You may say, well, what does SoFi have to do with PayPal? Well, if PayPal starts finally really rolling, we already have kind of seen these fintechs bottom, right? But let's say PayPal really starts moving, next thing you know, it's $70+ tomorrow, right? Well, SoFi and the other fintechs are likely going to go along with it because PayPal is the big dog in the space. And so it brings back momentum in fintech. Everybody starts kind of piling in. And so there's a high probability, if that played out, that SoFi, next thing you know, is going to be $9, $10, $11 very quickly instead of $7, right? And would I rather pay $7 for SoFi or $11 for SoFi? Well, obviously, I'd rather pay $7. I can get a lot more shares at $7 than I can $11, right? So that's why I'm kind of indifferent about if PayPal skyrockets after hours or not. If it does, great. If it doesn't, I'm fine with that as well because that will just give me a longer period here to buy SoFi. On the same token, if PayPal went down on these earnings, right, it's likely going to drag down SoFi as well. So, either way, I'm set in regards to kind of this whole situation, right? What I want to do, let's go ahead, let's pull up PayPal's expected numbers here. Keep these numbers in mind that we're about to go to. What was interesting? No, I don't want that crap. Let's go PayPal, baby. Hello, chat. Hey, if you just joined in, we need a lot of flapjack emotes in the chat, okay? If you just joined in, set the vibes right. We did it at the beginning, but there was only like 300 or 400 people with me, and now there's about 1,000. Flip flapjacks emotes. We need a lot of them. We need the vibes right going into these earnings here today, okay? So we go ahead and look at the earnings estimates, quarterly earnings estimates, 136. 136. Keep that number in mind, folks. 136 is EPS expectation from analysts. 36 analysts have numbers out on PayPal here, folks. 136. Revenue, $7.87 billion. I'm not talking 787 like the Boeing, okay? I'm talking 7.87 as in revenue expectations for PayPal here. Only 6.6% growth. I like that. I feel like we can beat. Yes, I do, baby. And then next quarter, less than 7% revenue growth expected. I feel like we can beat as well, okay? I feel good about the numbers. I feel good about the conference call we're about to get into, which is going to be very intriguing. With that being said, just because numbers are good and conference call is good doesn't mean necessarily stocks going up. We do know that, right? But I feel pretty optimistic. Now, EPS numbers could get messed up for the next couple quarters on a GAAP basis because they're going to do a bunch of restructuring. That's going to alter a bunch of one-time costs in there and things like that. So on a GAAP basis, numbers will get screwed up short-term on the EPS side. Okay, so just something to keep in mind there. Wynn Resorts numbers, 191 adjusted. Oh my gosh, was it 115? No! Oh my gosh! Wynn killed it.
Revenues coming in with a beat, or I should say 1.84 billion against the consensus.
And they beat by $100 million.
Beat on earnings per share, that's $1.91. Adjusted against the expected $1.15 per share.
Oh my!
Wynn set an all-time record here for profits. Adjusted property EBITDA of $630.4 million. Estimates by more than $100 million. 3 times more than what we saw the same quarter the previous year. Macau, a beat. Las Vegas, a beat. Boston, a beat. Now, over the last year, shares of Wynn Resorts are negative, but investors are just not crediting the company with the reopening in Macau, nor the continued strong performance in Las Vegas. The stock, as you can see now, up 2% in the extended trade. Morgan?
Gotta wonder if they're going to
should be up a lot more than that. Should be up about 20%.
Tessa Brewer, thank you. As I mentioned, Disney earnings are out. Julia Borston has the numbers. Julia.
Disney.
That's the right, Morgan. Disney reporting a big beat in terms of earnings. Revenues missing expectations slightly, falling right in line with last year's adjusted earnings. Last year's revenues, but adjusted earnings of $1.22 per share. That is a big beat from the 99 cents per share that analysts expected. That's also what the company reported a year ago. So big beat from the year ago numbers. That earnings beat follows cost cutting. The company saying it's on track to meet or exceed its $7.5 billion savings target for 2024. Disney also giving some rare earnings guidance, saying they expect full year 2024 EPS to increase by at least 20% to $4.60. Disney also announcing a new share repurchase program targeting $3 billion in repurchases in fiscal 2024, as well as declaring a 45-cent per share cash dividend payable in July. That's an increase of 50% from the last dividend that was paid in January. Now, Disney also announcing it expects to reach streaming profitability
Still waiting on PayPal.
by the fiscal fourth quarter of this year, and also saying that the direct-to-consumer entertainment division's operating losses have improved dramatically, improved by nearly $300 million from the prior quarter, a loss of $138 million versus a nearly $1 billion loss in the year-ago quarter. Now, Disney Plus core subscribers did decrease sequentially by 1.3 million, but that's pretty much in line with expectations. Disney does forecast a rebound, though, in their direct-to-consumer subscribers. The addition of 5.5 million to 6 million Disney Plus core subscribers forecasted for the second quarter. So that this all gives us a lot to talk about with Disney CEO Bob Iger, who joins me now in an exclusive interview. Bob, thanks so much for joining us.
Thank you, Julia. Nice to be here.
So, Bob,
Bobby's
we have
desperate.
a lot to cover. We, of course, want to get to the big news about your new
Come on,
joint venture
PayPal.
in the streaming sports space.
Still waiting on
PayPal. We want to start
PayPal.
with this earnings beat. What is behind not just the beat for the quarter, but the outlook for this next year?
I think it's critical for us to continue to stay relevant and continue to basically create ways that consumers can interact the way they want to with our storytelling and our characters.
Can you give us a launch date for this partnership?
I can't give you a specific launch date. I'm not even going to speculate right now. It's not going to be immediate. It takes a while to build this. It's not years. It's, maybe a couple of years, but we'll see.
So your stock is up about 7.5%. You just forecast 20% growth in earnings for the rest of this fiscal year. You're announcing this big partnership. Do you think this will be enough to assuage the concerns of Nelson Peltz?
Look, when I came back just over a year ago, I discovered a company that was really struggling. We had issues creatively with our studio. We had a streaming business that was losing a huge amount of money, and there was no path to profitability. We had a question
Still waiting on PayPal.
sheet, no ability to do what you talked about, which is things like stock buybacks, which we haven't done since 2018, or increase the dividend, which we had suspended at COVID. There were many issues. Morale was bad, and typically when I face what I'll call considerable challenges, I approached them with great patience. It was clear to me that the ability to be patient was non-existent. We had to be impatient. The fact that we're guiding to profitability by the end of this year, and that I'm saying to you, we're going to turn that business into a business that we're proud of in terms of margins.
Revenue beat.
We know a lot more about it and how to do that than any outsider is going to tell us or educate us about.
So have you spoken to Mr. Peltz, and are you planning
Looks
on
like
talking to him
EPS
about these
beat
results
also.
ahead of your big April 3rd shareholder meeting?
I have not spoken to Mr. Peltz in a while. I have no plans to speak to him.
Stock down, 61.
Well,
It's all over the place.
Let's get to the other big news, which you announced yesterday.
Wow.
This joint
60.
venture with Warner Brothers Discovery and with
It's
Fox
a dump.
News streaming.
It's a rug.
Bundle of your linear sports assets. Why does it make sense to do this? Are you at all concerned that this could drive accelerated cord cutting, or even challenge and cannibalize your Hulu with live TV business?
Look, I think if you're a sports fan, if you're a sports league, if you're an advertiser, even if you're a distributor, you want to engage with ESPN in some form. ESPN has always made a promise to sports fans that it will
Operating income up
serve them wherever
39%.
they are, whenever they want.
Okay, so far, the only bad numbers, or the only troubling thing I see here, I mean, there's a lot of great. It's like, I would call this report so far like 95% great, and like, I guess 5% bad. I mean, there's so much to be excited about here. If we go, I just want to go through the numbers here on a GAAP basis. Okay, net revenue's up 9%. That's good. Total payment volume up 15% year over year. That's really good. That's TPV. That's a very valuable metric that a lot of people judge a stock like PayPal on. So the fact that it's up 15%, very good. 9% GAAP revenues up here. 39% increase in operating income here for PayPal. Net income up a whopping 52%. Earnings per share up 61% year over year. If this stock dips tomorrow, I have to buy it. I have to buy it. I mean, these numbers are really freaking impressive. I don't know any other way to put it. The only troubling anything you could really look at here that I saw was if we go, let's see. So first off, this, by the way, this is what Alex Chris said. He said, I'm pleased, and we'll listen to a conference call here in a bit when it starts. I'm looking forward to that because he's going to have a lot to talk about, and that's going to move the stock huge. I'm pleased with our better-than-expected fourth quarter results, which are a testament to the incredible work that the PayPal team in their strong commitment is delivering more value to our customers each day. We're driving significant transformation across our company and are committed to making the necessary changes to our business to drive profitable growth in the years ahead. We've added key talent to our leadership team, accelerated our innovation velocity and impact, and taken action to realize cost savings and reinvesting into the most important initiative. 2024 will be a year focused on execution and our position to position PayPal for long-term success, right? So obviously I like all that. The only thing I could see is in the guide. Where's the guide at? There's the guide. They were talking about, where's the non-GAAP numbers here? They were talking about non-GAAP earnings per share expected to be in line with the 510 in the prior year. That's the only thing I can think would, like, you could even pick at in the report that would be like a negative, right? But it also could just be a sandbag by management team. This is obviously Alex Chris' first year going to be running the company here in 2024, right? You know, it's much better to set the expectations a little low, come in and beat those throughout the year versus set them too high and then you come in and miss and you look like a bad new CEO at the company, right? But overall, as a PayPal shareholder, I am pleased with these numbers. This is on a GAAP basis. There's no tricking this. This is generally accepted accounting principles. 9% revenues up, TPV up 15%, operating income up 39% year over year, net income up 52% year over year, EPS up 61% year over year. I can't ask for more, especially for a stock that's trading at a forward P of like 10 or whatever joke price is trading at. Never mind, they got all these big cost-cutting measures. So do you know what's going to happen to their profitability in the back half of next year once all the restructuring charges are done over the next few quarters? Oh my gosh. It's a steal deal of the century. We'll listen to what happens on this conference call, but I'm like, things are looking pretty flippin' flapjack and good here. I can tell you that much. Very strange stock price reaction. It went straight up to 69, almost broke 70, came back down, trading 62 right now. Makes no sense. I don't know what's going on with that, but At the end of the day, all I'm going to tell you is this stock should, in theory, be up substantially tomorrow. Doesn't mean it will be. It should be, though. This should be a $70 stock tomorrow. We'll see. This conference call is going to matter substantially here.
PayPal earnings, meantime, are out. Kate Rooney has the numbers. Kate.
Hey, Morgan. So it was a beat for PayPal's fourth quarter, but if you look at guidance and account growth, that was disappointing and really what's weighing on the stock here. It's been moving around here after hours. On the fourth quarter, though, in terms of those numbers, top line, that revenue number, it's better than expected, $8 billion. It was up 9% year over year. The bottom line, that adjusted EPS number, was a 12-cent beat, $1.48, and then payment volume also came in better than expected, $409.8 billion. On that account slowdown and growth slowdown, it had 426 million active accounts as of the end of the year. That is about 1 million short of expectations. It was down 2% year over year. They did start disclosing monthly active users as well. There's no comp to that, but it was up 1%. And then operating margins and take rate was a beat. Guidance, though, that is the weak spot today for PayPal, forecasting full year EPS of $5.10. That is 38 cents below expectations. Q1 EPS is set to grow in the mid-single digit range. Street was looking for growth of 8.7% there. I did catch up with CEO Alex Chriss, who took over PayPal about 4 months ago. He says, quote, "We are being conservative in the guidance." He said, "We want to see points on the board and we want to actually execute before we put anything into our forward guidance." He said the majority of new innovations are not in the guidance, and they, quote, "have a new mindset around profitable revenue growth and an improvement on transaction margins." Guys, back over to you.
All right.
Breakdown. Joining us now to discuss further, Dan Dolev from Mizuho.
Nice.
Dan, last month, I guess now, ahead of the Innovation Day, you downgraded PayPal. You've been bearish. Your thoughts on what we just heard in terms of account slowdown, growth
PayPal
slowdown,
bear.
and a big miss on guidance?
Hey, I always hate taking a victory lap, but it feels a little bit like that right now. Look, if you think about this, we look at two important KPIs. That's branded checkout, which decelerated 5% versus 6% in the last quarter, and unbranded, which was sort of the claim to fame up until now. That's where they were, going against Adyen. That also decelerated a couple of points. It's at 29 now. So to me, and obviously what Kate was saying about EPS being really, really weak for the guide. I guess not enough, cost cutting or what have you. But to me, those two KPIs are the most important ones because they're deep fundamental and they show you kind of how they can compete with Apple Pay.
Okay. I mean, when it comes to PayPal, this is a turnaround story, right? You got a new CEO at the helm, has been there for a couple of months. So in terms of guidance, there's really nothing to lose if you're looking to helm a new turnaround strategy, to be conservative with guidance. So to play devil's advocate here, could this potentially be a bottom for this name? When will we know that's the case?
I think we will know that if we start seeing kind of more clarity on, why branded checkout is slowing, right? Because the bottom for the stock will be when we figure out that whether or not they could actually, offset some of the headwind from Apple Pay. This is the biggest overhang on the stock.
Already bottomed.
And until that
break
gets
the news
resolved,
to you.
I don't think we're going to get a bottom in the stock because it'll just be a value trap. So we want to see why growth is decelerating and why they're not really guiding to a revenue number, unless I missed it. I just saw an EPS number, but I only had a few minutes to look into that.
Dan, it's not just Apple that I'm concerned about, Apple Pay. It's Klarna, Affirm, which I know that you like because they're looking at faster online checkout options, not just for the convenience aspect, but to be able to use data more effectively to steer retailers into using their services. To what degree is PayPal able to compete there, do you think? And to what degree do they face risk from names like that?
I think they face a lot of risk because at the end of the day, and this is a great question, at the end of the day, I can't talk about Klarna, they're private, but Affirm, they take credit risk, right? So they're in the business of taking credit risk and they're the last mile relationship. Essentially, PayPal is sort of a middleman between you and your bank or you and your credit card. So, the fate of all middlemen is to get squeezed. And that's why it's going to be increasingly harder for PayPal to go and compete against the firm because they're getting sort of a competitive edge in understanding risk. And that last mile relationship is enormously important. And this is what is sort of going away from PayPal over time because of the age demographic issue that we highlighted, that young people don't really use it as much as older people.
Like PayPal is eBay and Affirm is Amazon, in effect. Interesting.
You put it in a very, very good way.
Of course, we get firm earnings tomorrow as well. So we'll see how all of this shakes out in the next 24 hours. Dan Dolev, thanks for joining us.
Did you forget they own Venmo?
My pleasure.
Up next, a top analyst will give us his take on the big news we just heard from Disney CEO Bob Iger.
So, that guy's running a victory lap, and I'm like, oh, you're going to run a victory lap? You're going to run a victory lap with 15% TPV growth, 9% revenue growth, 52% net income growth, 61% EPS growth on a GAAP basis, 39% operating income growth year over year on a GAAP basis? I don't know if that's really the time to run a victory lap. If PayPal's revenues were going down and their operating income was going down and their EPS was going down, okay, run your victory lap, sir. But yeah, just because the stock price is down 2% does not give you the right to run a victory lap, okay, sir? So, a little ridiculous. But anyways, the numbers are pretty flippin' flapjack and good. I can't wait for the conference call here in a bit to start. So maybe I'm going to miss it here on PayPal, but it's just like things are looking pretty damn good from where I stand. You look at those GAAP numbers, and they are very hard to not be impressed by those GAAP numbers. Do I still have it up here? I mean, TPV growth of 15%, revenues 9%, operating income up 39%, net income up 52%, EPS up 61%, net cash provided by operating activities 64%. I mean, those are hard numbers to be like, oh, thou suck. This is a bad company. Like, no, you just can't make that argument. So, I mean, I really like what I see. Innovation going in through this first half of the year. The cost cuts will all go through in the first half of the year, and that's going to be a benefit in the back half. And obviously, you get the full benefit from that in 2025. And it's trading at the forward P it's trading at. We'll see. This is what makes a market. Risk reward, right? I don't know. The risk seems pretty appetizing.
The fourth quarter and full year results in greater detail, but the headline is that we delivered a solid quarter during the most important shopping season for our customers. In Q4, we delivered 9% revenue growth on $410 billion in total payment volume. Transaction margin dollar performance was better than expected in the fourth quarter, and we continued strong expense discipline, reducing non-transaction related expenses by 9% year over year. Taken together with $600 million in share repurchases in the quarter, our non-GAAP earnings per share increased 19% year over year. While these are solid results, we know there is still much room for improvement, and we're committed to making the necessary changes to our business and how we invest and operate to get it right. We're focused on driving profitable growth, including within our PSP services like Braintree. To wrap up, I am pleased with our fourth quarter results and the execution that the team delivered throughout the quarter amid an enormous amount of change.
Part of this growth rate is driven by the churn of unengaged accounts that I just mentioned, but we were also encouraged by the higher activity levels we're seeing among our core base of accounts.
Thank you. This concludes today's conference call. We thank you for joining. You may now disconnect your lines.
I mean, sometimes there's just nothing you can do, right? There's just nothing you can do. I mean, it didn't matter what they said in the conference call. It didn't matter the numbers. Wall Street wants a certain way. I mean, when you look at the numbers overall, it's very difficult to not be impressed. Very difficult, right? So there's just nothing. I feel like there's nothing they could have done, to be honest. Like, I listened to an entire conference call. Like, everything is so phenomenal for the long-term basis. Even, like, the fact that they're talking about including stock-based compensation in non-GAAP numbers, right? So it could make things not look as good in the short term, but that's a way better thing for the company for the long term, because then you start caring a lot more about SBC and making sure you're not diluting your shareholders to death, right? Big share buyback. They're talking about $5 billion or more in buyback in 2024, right? They're buying the stock at dirt cheap prices. Somebody had said, well, 510, they hope they're sandbagging that number. That's a bad number. They said something like that, right? I said, okay, is 510 really a bad number? Let's just assume they're not sandbagging. Let's say non-GAAP, they do 510. Is that a bad number? On a $58 stock, 510's incredible. Incredible on a $58 stock. If it's a $580 stock, 510's not very impressive, right? But on a $58 stock, 510's incredible. So, I looked at the stock across the board and I'm just like, as a long-term investor, somebody that's thinking longer term, it's just all right there, man. It's all right there. Shorter term, that's why I don't play around with short-term calls. And I saw some people try to play around in short-term calls on PayPal and those sorts of things. And that's why that can be very dangerous in terms of trying to play these short-term calls and things like that. If I ever play calls, I'm playing leaps way out in the future. Because in the short term, anything can happen. Black swan events, Wall Street might not like the stock, even if the numbers are great, right? They beat on almost every metric you could conceive of here today. But, it's still not enough and the stock goes down, right? That's why I like time to play with. If I'm ever going to do, first off, I put a very small amount of money in options. And if I do leaps, give myself some time. And if the stock shoots up in the short term, like let's say, I own a leap on PayPal, right? $80 strike or $100 strike and it expires 2 years from now, right? Let's say PayPal spiked huge on these earnings. It went to 70, went to 80, went to 90, whatever, right? And I wanted to go ahead and cash at that point. I had the optionality to cash. Versus if you buy short-term calls on it, you need to hit right now. And if Wall Street's not ready to get behind that stock, which you need Wall Street behind the stock to push the stock up, right? Without Wall Street, you're not getting there. If you're counting on Wall Street to help you out in the short term and to bail you out, it's tough. It's tough. Sometimes they'll do it, and sometimes they're just not there to do it, right? And so that's where short-term calls is trouble. A lot of trouble.
PayPal shares of the company down after the close despite beating the street's expectations on the top and the bottom lines. Guidance and account growth disappointing investors in weighing on the stock. That call's going on right now. Kate Rooney's got the details. Kate.
Account growth. What do they want? Like PayPal could grow accounts all day if they want. So what? A bunch of people that aren't even that interested in using the product or using the product? It's so stupid. When Alex Chris talks about profitable growth, that's what matters. Why have a bunch of users signed up that don't even use it? It's just silly.
On shares after hours, PayPal did not give a forecast when it comes to revenue or for payment volume. That omission is raising some alarm bells for analysts, at least that I'm talking to. Plus, PayPal is seeing a slowdown in accounts amid more competition out there. PayPal had 426 million active accounts at the end of last year. That's about 1 million short of expectations. It was down 2% year over year. They did start to disclose monthly active users, but there is no comp for that. PayPal also looking for full year EPS on the earnings side. $5.10. That was 38 cents below expectations for the street. Q1 EPS growth also missed. Payment volume, operating margins, and take rate did beat for the quarter, but branded checkout was also light. I talked to CEO Alex Chris about that forecast. He said, we're being conservative in the guidance. He said, we want to see points on the board, as he put it, and want to actually execute before we start putting anything into our forward guidance there. He just said on the earnings call that's going on right now, he said PayPal needs to, quote, build back a track record of delivering on our commitments, really trying to underline that change happening, and he calls it a transition year for PayPal, although he was also just asked about when that's going to start showing up in guidance. He wouldn't give an answer on that, Mel. Back over to you.
Kate, thanks. Kate Rooney. Steve.
When you look at the stock, it's out of growth ideas. That's the way what investors are looking at this as. If you go back, remember when they tried to buy Pinterest? That was back in October of 2021. The stock was trading at $270. The only good news is that this October, when the market started to rip higher, it looks like it bottomed out around the $50 level. So I think people are just rolling the dice, but there's definitely an issue with growth. Where are they getting that growth from going forward?
Coming up, can any stocks follow the end phase example the Chartmaster has?
Oh, God. The total payment volume was over $400 billion. It was up 15% year over year. The revenue's up 9%. The operating income's up 39%. Like, what more can you ask for? They act like this company's revenues and total payment volumes and EPS and everything's down the way they act. I mean, it's incredible. That's really incredible. But when Wall Street hates a stock, they hate a stock. It just is what it is. Wall Street hates it, man. You know, what can you do? Wall Street's hated the stock for 3 years now. 3 years. And eventually they'll stop hating it. But for now, it is still in the hated category for Wall Street. So even the layoffs, even the 9% layoffs, they still hate it. I don't think they'll hate it forever, but they still hate it. So that's 3 years now, okay? All right, guys, appreciate you joining me. Much love as always. I'm out of here, and I don't even know the next time I'll be Twitch live streaming. It could be a while. Might be NVIDIA earnings, unless I see something else interesting coming up anytime soon. All right, guys, much love. See you on the main channel tonight, and peace.